Right. Hi, everyone. Welcome to today's live trading session brought to you by IronFX. Right. Before we start, please take note of the disclaimer and the risk warning. Right. The information is not considered as investment advice or an investment recommendation, but instead is marketing communication. So take note of that the products are traded on margin and carry a high level of risk, and it is possible to lose all your capital. All right. Before we begin today's webinar as well, we got please once again take note of the disclaimer and the risk warning. And my name is Ketan Ramachandra, and this webinar series is brought to you in a special partnership between IronFX and the Everest Fortune Group, where we've been the finalists for Best FX and Equity Research for the following years, 2019, 2020, and 2021. Right, before we dive into the charts and trading view, let's take a look at what's on the economic calendar this week, right? We've just had the Swiss National Bank release its monetary policy statement at 8:30 a.m. GMT time today, where they made a surprise 50 basis point cut to their key policy rate. Markets were expecting a 25 basis points reduction, and they moved ahead with a jumbo 50 basis point cut. And later on today, we've got the ECB as well. They are expected to make a 25 basis point cut in their main refinancing rate. We also have US PPI and unemployment claims coming up as well. Right. There's you can see here the forecast for the SNB or the Swiss National Bank was to make a 25 basis point cut, reducing the key policy rate from 1% to 0.3 of a percentage point, but they've actually reduced it down to a half percentage point. The ECB is also expected to make a 25 basis point cut. Let's see whether they move ahead with that, right? Or will they also be more bold and make a larger reduction? And then later on at 1:30 p.m. GMT, we have PPI data and unemployment claims out of the US. And of course, finally at 1:45 p.m. GMT, we have ECB President Christine Lagarde delivering her press conference as well. All right, okay. So take note, this is what's coming up on the calendar this week. And definitely, we're already seeing much higher volatility for the Swiss franc, and we can definitely expect to see the euro face higher volatility as well. All right, okay, with that, now let's dive into the charts and trading view and begin the analysis on the dollar index. Then we'll take a look at the dollar franc, of course, since we just had the Swiss National Bank release its monetary policy statement. And of course, we'll take at the euro and then we'll look at commodities and indices. And of course, if there's any other instruments that you would like me to cover, please do drop your request in the chat box early, right? So we have time to go through the analysis together, right? Do not leave your requests at the end of the presentation. Just drop them in the chat box as we progress through today's webinar. All right, so starting with the dollar index, we can see here we're going to start the analysis on the daily time frame, and then we'll work our way down to the 4-hour time frame. Right, we can see here it has made a high here at 108.07 on Friday, 22nd of November, right, about 3 weeks ago. And we can see it sort of run into resistance as well since the beginning of December at around 106.7, right? And I would say it's a pretty decent overlap resistance as well around here. When we go on to the 4-hour time frame, we'll be able to identify this much more clearly. But for now, right, see a pretty decent overlap resistance at 106.58. And of course, the next resistance beyond that is simply going to be this swing high that has occurred here at the end of November. That's at 107.49. Right, in terms of support, right, it's a good support level here, right, with dollar index bouncing off 105.78 not once but twice. Firstly on 22nd of November and then as recently as 5th December. And then looking across this level at around, let me see, there's another pretty decent overlap level at 105.16, right? You can see, oops, hang on. Another decent overlap level at 105.15. We can see that previously this level functioned as decent support on 20th of June, then resistance on 10th of July, then strong resistance here on 6th and 7th of November, right? So this looks like to be a pretty decent overlap, which we can identify as a second support. Now, we're also going to run a few Fibonacci retracements, right? On this downtrend here, we can run a nice retracement starting from this swing high on 22nd of November, going down to this swing low on the 6th of December. When we take a look at all the fibs, we can see that the first resistance, right, has a 50% retracement aligned quite close to it. So we can probably use that. So let's just keep 50% on for now. Might be a 50 combination of the 50 and 61%. And actually, now that I look at it here, right, actually, I see a pretty decent overlap at around this level here at 106.87. I see a nice overlap resistance at around 106.87. And I also see the 50% retracement aligning quite close to it. Right. Now, on this big uptrend here, we can run another Fibonacci retracement starting from this swing low on 27th of September, going up to the swing high on the 22nd of November. Looking at all the fibs, we can see that the 38.2% retracement aligns very well with the second support. So let's keep that on. Right, so these are the key levels here for the dollar index on the daily time frame. And we see the dollar has risen very strongly since last Friday, 6th of December. Remember, we had a nice rebound in non-farm payrolls. And since then, we've had uh, demand for the dollar pick up once more. And we are starting to, we've seen now 4 consecutive trading days of higher gains for the dollar index, right? We've also had CPI data released yesterday, Wednesday, 11th of December, right? Although headline and core CPI came in line with the respective forecast, but we did still see headline CPI accelerate a little further, while the core CPI remains stuck at 3.3%, right? Remember, the Fed has an inflation target of 2%, and with the core CPI sitting at 3.3% and headline CPI accelerating to 2.7%, this inflation is clearly not moving towards the Fed's target of 2%, right? Which is also another reason we are seeing demand for the dollar remain strong. Remember, last Friday was a nice rebound in non-farm payrolls, which saw demand for the dollar pick up significantly, and that has followed through over the next 3 trading days as well this week, coming into this week and Thursday. Right, now let's move on down to the 4-hour time frame and see if we can fine tune the analysis. Right, so looking at this retracement, let's just catch it from peak to trough. And right, and as I mentioned, right, I see a nice overlap resistance. And around here, right, it looks a little bit better on the daily time frame. Right, it looks a little bit better on the daily time frame, but we can see that generally this level has functioned as strong resistance. It has functioned as strong resistance on in mid-November, 3rd week of November, then functioned as support here on 26th of November, and looks to be running into resistance several times as well. So this looks like to be a pretty decent overlap level that we can identify as the first resistance, and it's also accompanied by Fibonacci retracement at 50%. Second resistance is simply going to be the swing high that has taken place on the 3rd week of November here, right? And in terms of support, right, first support is a nice almost like an overlap level, I can say, right? There's resistance here on 11th November, and then support from 13th of November till the 29th, and also in early December as well. As a take note, this is going to be a pretty key resistance barrier for the dollar index, right? At 106.84. So if you've been long on the dollar index, for example, since the beginning of this week, right, identifying your take profit target close to this 50% retracement would be a suitable area to do so, right? This is looks to be a pretty strong barrier for the dollar index in the near term. So if we go long, typically we're going to identify major resistances, and we can use those resistances as potential take profit targets, right? Okay, in terms of this big retracement, right? Okay, let's see. Let's just fine tune this a little bit here. Right, so you can see here no changes to the 38.2% retracement. That's fine. What I can probably do is run another retracement from this swing low on 5th of November, going up to this high on the 22nd. Let's look at all the fibs. In this case here, we can see the 50% retracement aligning very well with the first support, and the 61% aligning very well with the second as well. So let's keep 50 and 61. There we go. Right, so once again, we see a nice uptrend for the dollar index since last Friday, right? We can even identify a pretty decent near-term ascending trend line as well, right? It's pretty decent ascending trend line that we can identify over here, just looking at the body of the candle, right? Take note for now, the dollar index still looks to be edging higher. And as I mentioned, if you've been long on the dollar index since the beginning of this week, right, identify your take profit target close to the 50% retracement would be a suitable area to do so. right? So these are the key levels here for the dollar index on a daily time frame as well as the H4 time frame. Let's come back to the daily time frame. Okay, when we look at the momentum indicators such as the stochastic and RSI on the daily time frame, they're sort of like in mid-range. They don't really indicate overbought or oversold condition just yet, right? And on the H4, with RSI at around 55, right? It doesn't really indicate overbought condition just yet, right? We would like to see both the stochastic oscillator and the RSI reach their extreme upper bounds, perhaps something like what we saw here. On 22nd of November, here we can see stochastic oscillator climbing as high as 88, RSI hitting about 75, and we did see the dollar index stall. Right, take note, I'm on a 4-hour time frame here. We don't really see any overbought condition being highlighted yet, which suggests that dollar index still has some room to run, perhaps up to the 50% Fibonacci retracement. All right, so these are the key levels here for the dollar index. Let's move on over to dollar franc. Right, as I mentioned, this Swiss National Bank made a surprise 50 basis point reduction in its key policy rate. Market consensus was for 25 basis point cut. So they've made a much larger cut, of course, a jumbo 50 basis point cut, which has caused the Swiss franc to weaken significantly. And of course, that's going to drive dollar franc higher. So let's take a look at some of the key levels for the dollar franc. But this was released at 8:30 a.m. GMT time. So I'm on the 30-minute time frame here, and you can see here this is, oh sorry, it was released at 8 a.m. I believe. Was it 8 a.m. or 8:1? Hang on. I thought it was okay, it was released at 8:30 a.m. GMT time, but it seems like the move had started well before that, right? Like you can see 8 a.m. is here, 8:30 is here. Okay, interesting though. It's quite interesting to see dollar franc actually climb significantly higher, like 30 minutes well before the announcement was made. So quite interesting to see that why that has happened. Okay, so let's coming back to the daily time frame first, and then we'll move on over to the 4-hour time frame. So you can see here, since 2 Mondays ago, 9th of December, dollar franc stabilized around 87.80 and has risen quite strongly, right? It has risen. This is the fourth consecutive trading day. Wait, right? Yep. Yeah, this is the fourth. Oh, sorry, since the beginning of this week, right? It stabilized in the beginning of this week, and has risen for 4 consecutive trading days, and it has also just sort of reached past this mini little resistance here at 88.62. Right, this was previously a pretty decent resistance barrier here, and it looks to have made a bullish breakout above this level and rising up towards what I see is the swing high resistance here. That's a strong swing high resistance that has taken place on Friday, 22nd of November. We can identify this as the first resistance. Right, when you look at it, when you look at the market structure, we see a very nice swing high resistance being formed here on 22nd of November. And looking over here, in June, there's another swing high resistance taking place, right? As the dollar franc retraced a little bit higher, it stalled at around 1933 and reversed sharply to drop drastically lower here. So this is where I would identify the second resistance for the dollar franc. And let me see anything else I could identify in between. No, probably that's fine. All right. Now, with a bullish breakout taking place above 88.62, this level could potentially function as a pretty decent pullback support level. So we're going to highlight it now as a dotted green line. And when I look at it a little bit below at 87.72, this is where I see the first major support for dollar franc. Right, this is an overlap support at 87.64. Right. There's also a nice uptrend from mid-September till the third week of November. So we can run a nice Fibonacci retracement from this swing low here on 6th of September till 6th of September till 22nd of November. Let's take a look at all the fibs. Right, we can see 38.223 is here not really aligning well with the overlap, so that's fine. Let's not force a Fibonacci retracement into the analysis if it doesn't line up with any of the predefined support and resistance levels. And okay, what I also forgot to mention is since we have seen this nice bullish breakout take place for the dollar franc, especially after this recent rate cut by the Swiss National Bank, we can see the first resistance is at around 89.34, right? So if you're if you've been long on dollar franc as well since the beginning of this week, we've had a nice bullish catalyst, right? We have a nice fundamental bullish catalyst for the dollar franc with this major rate cut, and we can target this resistance barrier that's between, I would say, 18 and around 89.34, right? 89.34 would be a pretty decent target to aim for, should we see dollar franc continue to climb higher here. Now, on this big downtrend, that begins from here, 1st of May till 6th of September, right? When we look at all the Fibonacci retracements, we can see the 78.6% retracement aligning very well with the second resistance. So we're going to keep that on here. And at the same time, we can probably, okay, I think that's about it on the daily time frame. Now let's move on down to the 4-hour time frame. Right, so looking at the 4-hour time frame, we can see that there is a resistance barrier here, pretty decent resistance barrier here, right? So for now, we've not had a clean break above this resistance just yet. So be mindful of this because we see a nice resistance taking place, like a double top here taking place on 2nd of December, and then on 4th of December, see a nice little double top taking place here. And this is where dollar franc looks to be sort of stalling as well. So take note, this is a level that we can use to see if we do see to help us identify whether the bullish momentum is going to carry dollar franc up to the first resistance, right? So we have identified an intermediate resistance barrier at 88.79, right? So take note, for now, dollar franc does look to have stalled around this level here. But should we see a clean break above this level, we can definitely expect this currency pair to rise up close towards the first resistance. First support, I think it's pretty okay, right? Of course, we see it dipping underneath 87.64 here on 6th of December. But when we look at it on the daily time frame, right, this looks like to be a pretty clean overlap level here. And also, actually, if I stretch it all the way back, you can see that it goes all the way back till here, right? Till 22nd of February. So it looks to be a pretty significant overlap here, right? On the 4-hour time frame, yeah, it does look a little bit messy, especially at this bit on 6th of December, but otherwise I think that's pretty fine. Right, so for now, dollar franc looks to have stalled at around this level here at 88.80. So take note, if you've been long on dollar franc since the beginning of this week, right? We are going to be looking to see if it can clear this intermediate resistance at 88.79, and if that happens, then we can target the first resistance at around 89.30 as a potential take profit target. Right, so key levels here for dollar franc on the 4-hour time frame, as well as on the daily time frame here. Okay, and then in about a few hours, we've also got the ECB releasing its monetary policy statement. So let's take a look at the euro. Let's take a look at what are the key levels for the euro. Right. So once again, we're starting the analysis on the daily time frame. Right, we've seen the euro has made a huge downward move since 6th of November, and an even larger one since the 25th of September. We're just taking a look at how far this currency has depreciated, and we can see since the beginning of November till the 3rd week of November, it has lost almost 5.4%, right? Almost 600 pips in the process. Huge move. And if you look at it from its peak from 25th of September, it has lost almost 7.8%, losing about 870 pips in the process. A huge depreciation in the euro, right? And we've seen what I also see is sort of like another bear flag here as well, right? We see a nice bear flag taking place here in end October, early November, before it gave way and we saw the euro make fall drastically lower. And I also see something a little bit similar as well, right? Another bear flag of sorts, right? Another bear flag of sorts over here. Right, so let's see whether the upcoming ECB monetary policy announcement is going to be the catalyst that's going to cause the euro to reverse and break through this bear flag as well, right? We see something similar to what is we see something similar conspiring to what has happened at the end of October and early November. Right now, on this big downtrend here, we can also run a Fibonacci retracement. Okay, but before that, of course, before that, I'm going to try and identify a resistance level. I see a nice overlap resistance at around 1.0600 exactly, right? We see a nice swing low taking place here in mid-April. And then after that, we can see this level functioning as resistance since mid-November. Right? So this is very likely where the first resistance for the euro is going to come in. And the first support, right, there's a pretty decent support level here as well. It's at 1.0485. So identify this as the first support. And if we zoom out a little bit, we can see we have to go all the way back till this little pullback here. We can see why this is going to be important once we come back to see how the euro has been trading, right? We can see come here, second support. We see a little pullback support, a little swing here take place on 29th of November 2022. And it is also where the euro found support once more on 22nd of November. So that's where the second support sits. First support looks to be around here at 1.0485, second support at 1.0330. Higher up on the daily time frame, second resistance looks to be around here. Pretty decent pullback resistance at 1.0665. All right, now that we've identified it on the daily time frame, we're going to move on down to the daily, to the H4 time frame. Let me see if this descending trend line is worth putting on. Okay, maybe not so much, just a couple of touches here and one touch here. Maybe let's not keep this descending trend line for now. All right, let's move on down to the 4-hour time frame. And over here, right, you can see a little bit closer how this bear flag could be, playing out. Right, similar to what we saw at the end of November, end of October, early November. Let's just adjust this a little bit. Right, okay. Now on this downtrend here, right, there's a nice downtrend here. We can run a Fibonacci retracement as well, starting from this swing high, 5th of November, going down to this swing low on 22nd. Let's look at all the fibs. And okay, we don't really see any of the retracement levels align well with the predefined first and second resistance, so that's fine. Don't remember, as I mentioned, don't force the Fibonacci retracement into the analysis. All right, so let's get rid of that. And for now, right, okay, so these are the key levels here. So take note, I'm on H4 time frame. If we do see the ECB make a move ahead with its rate cut, and we see a statement and press conference that conveys a very dovish outlook with regard to future monetary policy action, I think that we can expect the euro to probably reverse and break out of this bear flag, and as well break underneath the first support as well at 1.0485. So we may have a potential bearish reversal or bearish breakout for the euro should we see a statement and press conference that conveys pretty strong dovish outlook with regards to future monetary policy action here. And should that bearish breakout take place, right, we can also target a potential, identify a potential take profit target at around 1.0400 here. 1.0400 would be a pretty decent area to identify your first take profit target. And of course, should we see the euro slide even lower, then we can definitely target close to where the second support sits at. Right. Okay. So these are the key levels here for the euro on the 4-hour time frame, daily time frame as well. All right. Then with that, we can let me see if there's anything else to add on. No, probably not. Right. Okay. Then if that's the case, then let's move on over to gold. Right. Move on over to the commodities. We'll touch on gold, we'll look at WTI oil as well. And of course, if there's any other requests, yep, please do drop them in the chat box early, right? Do not wait till the end of the session to drop your request in. Do drop them in early. So we've got time to go through the analysis together. All right, so looking at spot gold, right? Once again, on the daily time frame here, we can see the intraday all-time high for spot gold was made on 31st of October at $2,790 per ounce, right? This level is also clearly a resistance, swing high resistance here. And at the same time, I see dollar gold currently trading close to what I see is an overlap resistance. Right? There's a nice overlap resistance at $2,715 per ounce. Right, a little bit better here. We can see this resistance overlap much more clearly here. We see support taking place on 23rd of October. Then we see nice resistance taking place on 22nd of November. And of course, as recently as yesterday and today, resistance once more. Right, so it's testing this first resistance here. And of course, the second resistance is simply going to be this swing high that has taken place right at the end of October. All right, okay. Then let me see what else we got. In terms of support, there is probably the first support I would identify here, 2,607, right? We can see a nice swing low taking place here in 9th of October, on 9th of October, before staging a very nice rebound. Of course, we see a break over here, but generally, why I identify this as still as a pretty decent support area, because we can see since 26th of November, spot gold has managed to stabilize or stay above $2,610 and stage a very nice rebound since the beginning of this week here. Then in terms of the second support, right, I see a nice swing low, right, a very significant swing low support taking place here in mid-November. So this is where I would identify the second support. And if I want, you can probably, if you're probably not necessary to stretch it all the way there, maybe just till here. Second support. Very nice. Okay. Now let's see. With dollar rising as well, right? Actually, you see four consecutive days of of gains for the dollar, and at the same time, we're also seeing four consecutive gains for the gold as well. So what we're seeing is this week is positive correlation, right? Typically, gold and the dollar share an inverse correlation or negative correlation, but for now, we are seeing a positive correlation between these two asset classes, right? It's probably a sign of demand for safe haven assets. Remember, the US dollar and gold both function as safe haven assets. And when you see them moving in the same direction, typically that's a sign of that. First of all, that's exhibiting these two asset classes are exhibiting positive correlation, and it's also a potential sign of potential sign of higher demand for safe haven assets. Right. Okay. So these are the key levels here. Let's see. Okay, on this nice downtrend, we can run a Fibonacci retracement starting from this swing high, 31st of October, going down to this swing low on the 14th of November. Right, I don't really see any of the Fibonacci levels align with the resistances, so that's fine. We'll get rid of it. On this uptrend here, from 3rd of May till 31st of October, right, we can sort of see 50%. Yeah, not exactly close to it. Maybe we don't really need a Fibonacci retracement for now. Okay, that's fine. Let's just get rid of that as well. Okay, now let's go on down to the 4-hour time frame, where we can see the first resistance to be a really significant barrier here, right? We can see we can see a very nice swing. Oops. Wait, hold on. We see a very nice swing high resistance taking place here on 22nd of November. And once again, it does look like gold has stalled around this level. Oh, before that, let me see anything on the daily time frame. Right, okay, on the daily time frame, RSI is not really indicating oversold, overbought condition just yet. The RSI is, but I would say we would see both of them indicate a potential overbought condition, right? So perhaps maybe we could see a potential bullish breakout. But okay, on the H4 time frame, we are seeing an overbought condition being highlighted, something similar to what happened on 22nd of November. We can see on 22nd of November, RSI climbing as high as about 80, stochastic climbing as high as 100. And then a few days later, right, this happened on 22nd of November, and then the bearish reversal took place on the 24th. So the following week, right, the following week, we saw a bearish reversal for gold take place, right? And we are seeing a slightly similar setup as well, right? On 11th of December, the RSI hitting 77, stochastic hitting about 100 once more. We have a potential overbought condition being highlighted. Perhaps we could see this impending bearish reversal take place, maybe tomorrow or perhaps next week. So take note, this is something to be mindful of, right? You don't really see an oversold condition, overbought condition being highlighted very easily. But once again, when I look at it here on 21st of October, we see an overbought condition being highlighted, but the pullback only lasted a couple of days. This wasn't a very sharp pullback. Whereas the one that occurred on 22nd of November, this was a much deeper pullback as well. So take note, although we can see overbought condition being highlighted, it doesn't necessarily mean we're going to see a sharp pullback as what we saw on 22nd to 25th November. It can also result in a much smaller pullback as what has happened in October, but mindful of this level, this resistance level, and the potential overbought condition being highlighted here. All right, so these are the key levels for gold on the daily and H4 time frame. Right, I would maybe want to identify an intermediate support level as well, right? I see a pretty decent intermediate support around $2,665 per ounce. Right, we can see a little bit of resistance here on 25th of November. Oh, sorry, support here on 25th of November, resistance on 29th of November, and some consolidation around here as well on 9th of December. So this is a level to watch out for as well, right? We could see, should we see gold prices pull back, this is the first level where it could stabilize as well. So be mindful of this intermediate support at 2,665. All right, okay. Right, this is for gold. Right, then let's move on over to WTI oil. Right, when we look at it on the daily time frame, right, we can clearly see a series of lower highs. Right, we can see this has been a strong downtrend, but it does look like to have broken out of this downtrend as well, especially from this descending trend line. And if you look at this near-term descending trend line, we do see a bullish breakout take place. And on the slightly longer time frame, there is a much larger, or there's actually a couple of descending trend lines here that we can use as well. Right, but for now, we've seen a nice bullish breakout takes place on Wednesday, 11th of December, above this descending trend line here. And it does look like crude oil is going to climb higher. And the first resistance is going to be at this swing high resistance here. Where there's a nice swing high taking place on Friday, 22nd of November at $71.26. This is where we can identify the first resistance. And the second resistance is this other swing high here. It's almost like I would say like an overlap level. And this is a nice overlap level at $72.62. And identify the second resistance. So what this means is with this bullish breakout taking place, right? If you had caught this bullish breakout as of yesterday, or perhaps early today, right? We're going to be targeting close to the first resistance at $71.26 as a potential take profit target here. And because we've had this breakout take place over here, I would also identify this as an sort of like an intermediate. There's another nice overlap level here. Maybe not this, probably just keep it around here, right? Probably identify this as a decent pullback opportunity as well. And it's a very strong support at around $66.90. Right, now let's move on down to the 4-hour time frame. where we can see this bullish breakout take place very nicely, right? We can see the descending trend line being tested several times since 7th of November, and we see this bullish breakout take place on Wednesday, 11th of December at 3 p.m. GMT time. And not only that, okay, on the 4-hour time frame, it looks to be breaking out of this overlap as well. You can see a very nice overlap resistance here. And we see first breakout taking place yesterday, and we see the second breakout taking place today, right? Paving the way for what would I say, paving the way, but giving us further conviction that we are likely to see this bullish momentum in crude oil perhaps gain further traction, right? And if it does climb higher, we're going to be targeting the first resistance at $71.26 as a potential take profit target. And actually, when I look across all the way till 7th of November, this is a very nice overlap level, right? We see support taking place here on 7th of November, and then a nice swing high resistance taking place here on the 24th. Right, okay, so these are the key levels here for WTI oil, right? We're seeing a significant shift in momentum since 9th of this, or since the beginning of this week, and especially with WTI oil breaking out of this first descending trend line. The bulls really looks to be coming back in, and especially clearing this overlap at $70 as well. This looks to be like the next major potential bullish breakout level here. Right, okay, let's see if there's anything else to cover. Okay, anything else to cover for crude oil? Maybe, okay, let's take a look at it on the daily and then look at, okay, so stochastic oscillator and RSI are both sort of mid-range, right? They don't really indicate overbought or oversold condition on the daily time frame. Let's take a look on the 4-hour time frame. Right, it does look like it's coming close to indicating a overbought condition on the H4 time frame, right? So just be mindful of this, right? If it doesn't, if it doesn't clear $70.50 or $70.20, we could see this pull back a little bit because we do see a potential overbought condition being highlighted here. Perhaps something similar to what has transpired on 22nd of November as well, right? You can see here, stochastic oscillator hitting about 91, RSI hitting about 70, crude oil prices stalled just underneath $71.50 before reversing quite sharply. Maybe something similar looks to be brewing at the moment, right? Something similar looks to be brewing at the moment. And also we see another failure here on 4th of December. So take note, although we've seen this nice bullish breakout take place on Wednesday, it looks like it's running into some serious resistance at around $70.10 per barrel here. All right, on a H4 time frame, we also saw a nice oversold condition being highlighted, right? On last Friday, 6th of December, right? We see crude prices stabilizing at the first support at $66.90. We also see the stochastic oscillator dropping under 5, while the RSI dropped to 32, both of which indicated a potential oversold condition, and which is what we saw transpire as well. We saw crude oil prices stabilize around $67 per barrel to stage a very nice rebound since the beginning of the week. This rebound here, approximately, right, is about 4.5%, right, gaining about $3 per barrel here. Pretty good rebound. Bullish reversal that has taken place in the beginning of this week. Right, so these are the key levels here for WTI oil on the H4 time frame and daily time frame as well. Right, okay. Right. If there's no other requests or if there's no further requests, then I'll just move on over to Germany 40. We'll cover the indices, and I think that should wrap things up. All right, okay, unless of course you guys got something else. Yep. But otherwise, let's just move on over to the indices here. Germany 40 is an instrument that tracks the DAX futures. And we can see that DAX has made its latest intraday all-time high on Monday, 9th of December. That's at 20,483. There's a very clear first resistance sits around here. First support, I believe when we go on the H4 time frame, we should be able to identify a first support at around 20,088. And because um let me see. Just let me try something out first here. Okay, nope, can't do that. Can't do this either. Okay, so what I've done here, I've run a projection, Fibonacci projection, starting from this low on 5th of August, going up to 0.2, 17th of October, and ending at zero point 0.3 on 19th of October. The purpose of this projection is to find potential resistance barriers beyond the intraday all-time high. Remember, the intraday all-time high is at 20,483. We have no other level that we can reference as a potential resistance area. So in such a scenario, we're going to rely on Fibonacci tools. And in this case, it's going to be a Fibonacci projection. So we can see the 61.8% Fibonacci projection as indicated where almost precisely where we expected the DEX to stall. So that means the next resistance barrier is quite likely going to be identified by the 78.6% Fibonacci projection. We can identify this as the second resistance here. So first resistance is here. There we go. Right. Okay. Now let's look at it on the H4 time frame. Right. In terms of support, maybe I would just identify this here. Right. We can see a pretty decent overlap at 20,269. And we see resistance here on 4th of December, and then we see support on 10th of December, and you can argue here on the 11th as well. A pretty decent overlap level at 20,269. But beyond that, right, I don't really see anything else because actually, if you look at it, the next major resistance or support looks to be at this pullback level here. That's a nice pullback level here. This previously was a major swing high resistance on 21st of October. Then once the bullish breakout took place on 2nd December, right, this level is quite likely going to be where the next major support sits, which is also kind of scary because you don't really see anything between 20,269 and 19,650, right? Even on the 4-hour time frame, right, I don't really see any major support area that we can identify. Maybe there's a Fibonacci retracement that could possibly uh, help us identify one. But let's start the retracement from here on 19th of November up to the swing high on 9th of November. 9th of December, sorry. We see 50% retracement aligned very well with the second support, but 23 and 38 are here. Let's just keep 23.50 and 38. But yeah, there's a huge gap in between the first and second support, right? There's nothing really in between. Maybe something on the 4-hour time frame. No, nothing really on the 4-hour time frame as well. Right, so it's quite a huge gap here. So let's see, maybe the 23 and 30% retracement levels could function as some sort of support areas. Should we see or rather if we see the first support get taken out. Right, so these are the key levels here. Okay, let's go back to the daily time frame and just take a look at the stochastic and RSI. Perhaps it does seem to be indicating an overbought condition, right? So maybe something similar to here on 2nd of September. Maybe something similar here as well. So 30th of September as well. So you can see here on these two occasions, stochastic and RSI indicating a potential overbought condition. And we did see the DEX stall and pull back over the next few days. We've seen this overbought condition being highlighted as of last Friday, but the DEX is still holding up for now, right? So take note, every time we see an overbought condition, it doesn't automatically mean we can expect a bearish reversal to take place. Sometimes it can take longer to play out, right? It can take longer to play out. On 2nd of September, it played out within a couple of days. And then on 30th of September, it played out as well within a couple of days. But for now, this current one, if the impending bearish reversal is going to take place, it's playing out, taking a much longer to resolve itself. Yeah. Let's look at it on the 4-hour time frame. Okay. 4-hour time frame, we can see that clearly stochastic and RSI are nowhere near their overbought conditions. So perhaps this is part of the reason why we can, not part of the reason, but maybe this gives us a little bit more conviction that the DEX is going to probably hold up much better, right, for the next couple of days. right? So these are the key levels for the DAX on the H4 time frame as well as on the daily time frame. Right, okay, with that, then we'll wrap things up with the US 500. Well, let's move on over to the US 500, and we can see the latest intraday all-time high being formed at 6,099.70, and this was on 6th of December, last Friday. And then, oops, identified as it's at around the first resistance. We'll probably fine-tune this level a little bit on the H4 time frame. And then in terms of support, right, I see almost like a nice overlap. Maybe I'm going to, yeah, pretty decent overlap here. We can identify 6,005 as the first support, right? Because we see a nice swing high resistance taking place on 11th of November. Then we see some consolidation here on 27, right? And a little bit below, there's another nice overlap at 5,866. We can identify this as a second support. And of course, with US 500 trading close to its intraday all-time high, right? In such a scenario, right, we can rely on Fibonacci tools such as extensions and projections to help us identify the second resistance. So in this case, let's start with a retracement. The purpose of this retracement from 11th of November down to the swing low 19th of November is to look for key extension levels that sit at 127 and 161%. And we can see that the extension levels at 137% helped us identify where we could expect US 500 to stall. And this is what it did last Friday and for most parts of this week as well. And we can use the extension at 161% to help us identify the second resistance here. Right. Now, there's a couple of Fibonacci retracements that we can use. The first of which we're going to be starting from here, this swing low on 19th of November, going up to the intraday high on 6th of December. Take a look at all the fibs. We can see 38.2% retracement aligned pretty well with the first support. So we're going to keep that on. We can also probably run another retracement from here. This low on 4th of November, going up to this high on the 6th of December. Looking at all the fibs, we've got a 23% retracement aligning well with the first support. So we have 23 and 38%. This creates a Fibonacci confluence. Then we have a 61% slightly below the second support. So I'm going to keep 23 and 61 here. Just keep 61 and 23. And perhaps we can run maybe just one more retracement from here, 6th of September to this high, intraday all-time high. Let's see if we look at all the fibs. 38, no, probably not necessary here. Maybe from here. Oops. But on this long uptrend, we can see the 23% aligning with the second support. So let's just keep that on here. So these Fibonacci retracements help us add a little bit of further significance to the strength of this support levels here. Okay, we can get rid of, okay, 130, so just keep it on for now. Right, so these are the key levels here for US 500 on the daily time frame. Let's zoom on down to the 4-hour time frame. Right, we can see here first resistance, just adjust it a little bit. I think this is fine. Okay. Right, so you can see here this first resistance identified by the, okay, now looking at it here, this 127% extension may not be valid anymore. Right, we can see here on the 4-hour time frame, we can clearly see the candles climbing well above the 127% extension. Right, but this was something that was used in the past to help us identify a resistance barrier here. But for now, this level is no longer valid, so let's get rid of it. But what is still valid is the 161% extension, which is at 6,147. This is the second resistance. So what this resistance also tells us is if we do see US 500 break higher, right? If it breaks higher, maybe next week, then we can identify a potential take profit target, which is at the 161% Fibonacci extension. So that's around 6,140. Right. Okay. Anything else to highlight? No, probably not. I think this is pretty much fine as it is. All right, before we continue or before we wrap things up, I'm just going to launch a poll as well. Truly appreciate it if you guys can give your feedback with regards to today's webinar, and we'll just do a quick conclusion to wrap things up. All right, keep the poll running for another 30 seconds or so. All right, I think that's most of you who have voted. All right, truly appreciate it. All right, thank you so much. Okay, let's move on. Okay, poll is closed. All right, okay, great. Let's see. So just before as we wrap things up, take note. Right, this is the calendar for today, Thursday, 12th of December. Right, we just had the S&P make a jumbo 50 basis point cut, bringing it down to 0.5%. We have the ECB expected to make a 25 basis point cut at 1:15 p.m. GMT time, followed by President Christine Lagarde's press conference at 1:45 p.m. Take note, it's going to be a very volatile period for the euro from about 1 p.m. all the way till about 2:30 p.m. GMT time. In between, we also have PPI data and unemployment claims out of the US. So take note, this is going to impact the dollar as well, right? So once again, thanks everyone for tuning in to today's session. Right, do look out for all upcoming webinars brought to you by IronFX, right? I wish you all the best in your trading journey. And as we approach the tail end of the week, it's also a good idea to take some time off over the weekend, right? And spend some quality time with your family and friends. All right, thanks everyone. Take care. Have a great trading week and catch you all in the next session.